Hi everyone, Matthew here at Forex Nation. Going to go over the trade setups for this week, March the 22nd through the 26th. I'm not going to hit up every single trade setup, just highlight the ones that worked out really well and according to the strategy. Now, first of all, let me just show you here that these lines that I have on my chart are referencing previous week action. So this is why you want to always leave your support resistance lines in there for future reference, because you're going to see how they come into play. This line that I have down here at 34.62 was the lowest low that the euro dollar made during the initial downtrend that it's been in since January. The second lowest point being this level right here, and then the next time we saw some lows was on this rally up where it hit the bottom trying to break this line and could never close below it, and so this became another line to have on my graph. Oops, just kind of tweaked it a little bit there. So going into what we saw beginning in the week, the first thing that we saw in the week was this narrow range action, which is usually what you see occur during the Asian hours. Still not daylight yet in London or in New York, so things are kind of slim pickings for the euro dollar. What I was waiting to see was a bounce off of this line, or see what it would do down here at this level, this being the lowest level euro dollar has been able to make it to. So I expected this to actually hold price action up for support, since there wasn't much fundamental data to drive it. And anytime it's going to make a break for a decent support level, that's usually because fundamental forces are kicking into effect, which we had happen later in the week. Anyways, what I saw here happen was price action end above this support line, and although it didn't quite touch it and thus never truly tested it, I did go ahead and get into a buy right here. I took this buy up, and let me zoom in. This is where the hourly and the 15-minute chart come into play with my trading style. This is the 15-minute chart. You see more noise on the 15-minute chart. You see more action going on, and you can see more fake outs as well. So that's why you don't want to stick to just one time frame. I use the hourly time frame as my bigger picture, filters out more of the noise, and then my 15-minute for my entries and my exits. And this is what I mean by an exit example. This was where I initially got in. As you can see, price action did finally go down and touch the 34.62 level and couldn't take it out, and the rally ensued. What I do is I wait for the rally to go up, and then I wait for a retrace. I expected this to be a retrace because with this much momentum, the red moving average becomes resistance or support depending on which way the trend's going. So I expected to see price action come down here, but then it took back off again. That's why I moved my stop loss up to here, locking in some profit. When this initial rally finally stalls out and retraces, look what it bounces off of again, the red moving average. Move my stop loss up to here, locking in even more profit. This thing went up as high, you can see, to this area, and at that point I locked in my profit here and got taken out on the next candlestick for a decent profit. Then I zoom back out, take a look at my bigger picture, see what's going on. I can see the rally has broken through the blue moving average. We could see it go as high as up here to this resistance line, or even the weekly R1. I doubted it. Fundamental forces are really pushing and putting pressure onto the euro because of what's been going on over there in Greece, as everybody knows who follows along with my analysis. So anyway, we were waiting for, this is a good thing. So when I see this going against the trend and I see the crossover happen, I don't necessarily buy, because I don't like going against the main trend, because the main trend right now, if I do zoom out just to show you, has been a down one. And it's coming back down to test this line here. So that's really where I want to watch the price action. Once price action's moving up, that's great, because I'll zoom back into my 15-minute chart. Sorry, let me get back over there to that point in time. As you can see, the crossover happened right here, and it's up above the blue moving average. So I wait for the crossover down, and this is where that happens. That's my next entry. Enter that trade, and we get all the way down to here. It gets stopped out here because, like I said, I'd wait for the initial retracement, which I guess technically was here, because as you can see, there wasn't any real retracement, but that's where I lock profit in. It goes down again, I lock profit in there. I'm locking profit in tighter now because, like I said, we're at a line here. We're getting close to this line, we're getting close to this line, so I don't know how much strength we're going to need to build up enough momentum to break it, and it doesn't look like we got it on this. So I got stopped out about right here. I let all this go down. This was, I believe, Wednesday, And this would have been a fake out, as you can see, if I was watching. Well, first of all, I would not have wanted to go against the main trend, which is up, so I would not have traded this crossover up. Although you could have gotten in here and scalped maybe 20 pips from that move there, just to say, just to mention. I waited for the crossover again, going in the direction of the main trend, and this was my second entry. This entry was a great one. I did not move my stop loss. I left it up here, and that's a good thing because it would have come up to knock me out had I moved it to break even once we went into some profit. That's another part where discretion comes into your strategy, and you have to be able to sort of make decisions on your own, and nobody can really be there in the heat of the moment to tell you whether or not to lock in profit or set it to break even or leave your stop loss alone. That's just something you have to use your discretion on, which you kind of keen into what you need to do to keep that from being a hazard to you. So sorry, getting off topic a little bit there. Let this thing fall, and as you can see, when it got here to this main line of support, I expected to see a little bit more of a battle. I mean, it was underwhelming, anticlimactic, to say the least. This is a level that hasn't been broken in 10 months, and all of a sudden, well, that's what you get. That's the break. That's it. So cool. I was still in the trade, and I was able to ride this thing down to about right here, and this just was a tricky moment. I moved my stop loss to, honestly, I had it right here, and I said, I'm going to move it a little bit closer down, and by doing that, I took away my one rule of leaving my stop loss above 2 lines of support or resistance. That would have been the red and the blue if I'd have left it up here, but I didn't. I moved it down here, and I got stopped out right here, right before the next big sell-off occurred. I didn't get involved in anything really along here, but let me just zoom back to the 1 hour just to show you what all was going on the 1 hour. Now, on the 1 hour, you would not have had as many trade setups. As you can see, the crossover happened up here, so the crossover never occurred again until right here. So on the hourly, you're going to have signals, like you had the crossover here, you had the break in the trend line here, another break of a major form of support here. And so what you would normally do is trade this as it bounces off of the red moving average, but that can be tricky because you have times like this here. And then when crossovers finally do occur, it's at the end of a decent move, so you really would have to trade crossovers on the 15-minute to be an intraday trader like me. The hourly is just too slow, but you can use the hourly too. Main thing I guess I'm getting at, I'll wrap it up here, is that you want to have 2 time frames that you use. The hourly and the 15-minute are my 2, and those 2 need to be far enough apart. You wouldn't want to use the 30-minute and the hourly. And I'll tell you why. You just don't zoom out enough with the 30-minute. The 30-minute doesn't filter out enough noise to warrant going up to the 1 hour, because really you're only looking at combining 2 of these candlesticks into one, and that's just not enough still of a big picture. So what you want to do is use time frames that are at least like 4 times greater. So like, I use the 15-minute and the hourly. That's exactly 4 times. Or the hourly, if you like the hourly, the 4 hour would be the bigger time frame to use for measuring things, and the daily and the 4 hour would be the exception there, where that's 6 times greater. But that's your basic option inside MetaTrader 4 platform. Anyway, yeah, I think that's basically a couple of highlights. Like I said, I can't get into every single trade because I don't know how beneficial it would be. Hope that helped. Thanks for watching.